The next learning objective is to prepare journal entries for a process costing system. So now we will switch from working on production cost reports to preparing journal entries for a process costing system. Having our T accounts will help create the entries. For Peggy's puzzles, costs start in raw materials. They then flow to the assembly department where the picture is glued to the cardboard. Then they flow to the cutting department where the glued picture is cut into puzzle pieces and then placed in the puzzle box. Then the completed puzzles go into the finished goods inventory account where they wait to be sold. When sold, the cost of the puzzles transfer from this balance sheet account to the income statement account called cost of goods sold, which is an expense account. It will also help if we show the manufacturing overhead account. Recall that indirect costs are part of this account called manufacturing overhead. It is not an asset account. Manufacturing overhead is a temporary account used to accumulate costs. It falls under the equity classification and is treated like an expense, which is why I put it under cost of goods sold, another expense. And like other expenses, it increases on the debit side. It normally has a debit balance, and it decreases equity. What we will do with this account is to accumulate actual manufacturing overhead costs on the debit side. These are costs like indirect materials, indirect labor, factory depreciation, factory utilities, factory insurance, factory property tax, etc. All the factory costs that cannot be directly traced to a product. Then, at the end of the accounting period, we will credit the manufacturing overhead costs to lower it and allocate the manufacturing overhead to the individual process so that each process gets its share of the manufacturing overhead costs. This is the same as in job order costing, except that instead of allocating overhead to individual jobs, we allocate overhead to the separate processes. It might also help if we have our accounting grid to help us determine debits and credits. In transaction 1, raw materials are purchased. So during the month of July, Peggy's Puzzles purchased raw materials on account for $175,000. The materials are things such as boxes, glue, cardboard, and pictures. So raw materials and asset account increased with a debit, and AP, a liability, increases with a credit. Transaction 2 is using raw materials in production. During July, direct materials were assigned to the 2 production departments, $140,000 to the assembly department and $19,000 to the cutting department. $2,000 of indirect materials were accumulated in manufacturing overhead. So the work in process inventory account for the assembly department increases by $140,000, and since it is an asset account, it increases on the debit side. Direct materials for this department are the cardboard, pictures, and glue. I won't be posting to the T accounts except for manufacturing overhead. Then, the work in process inventory account for the cutting department increases by $19,000 as $19,000 of boxes are transferred out of raw materials inventory into the cutting department. For indirect materials, they will increase manufacturing overhead. By definition, indirect materials cannot be traced to one department or the other, so they increase manufacturing overhead temporarily. Later, they will be allocated to the individual departments using the same process we use to allocate overhead to different jobs in job order costing. Now, to help us remember how the manufacturing overhead account works, I will post the $2,000 to the manufacturing overhead. This will help us later when we have to adjust manufacturing overhead so that it's zero. And finally, the asset account, raw materials, is decreased with a $161,000 credit. The $161,000 obviously is just the total of the 3 debits. Transaction 3 is recording labor costs incurred during the period. During the month, Peggy's Puzzles incurred $20,000 in direct labor costs in the assembly department, $3,840 in direct labor costs in the cutting department, and $1,500 in indirect labor costs accumulated in manufacturing overhead. So the work in process inventory account for the assembly department increases by $20,000, and since they are asset accounts, they increase on the debit side. They are increasing because the cost of the product increases as we pay our employees working on the puzzles. This $20,000 represents the wages of the employees working directly with the assembly department's pressing machines. Then the work in process inventory account for the cutting department increases by $3,840 to pay the workers working in the cutting department. And $1,500 is paid to workers who do not work specifically with either department. This could be the factory supervisor and or the factory janitor. This indirect labor is temporarily assigned to manufacturing overhead. Now I'll post the $1,500 to manufacturing overhead. And finally, the liability account wages payable increases with a $25,340 credit, which is just adding up our three debits. Transaction 4, incurring additional manufacturing costs, has two parts and requires two separate journal entries. So I will split them up to save room on the screen. So in part 1, Peggy's Puzzles incurred $35,000 in machinery depreciation. This depreciation is for the whole factory, not for either department specifically, so we have to debit manufacturing overhead. Because the depreciation is for machinery that created the puzzles, the depreciation is part of the cost of the puzzles and therefore cannot be recorded as a depreciation expense. Later, the manufacturing overhead will be allocated to the work in process accounts, increasing them with debits and therefore increasing the cost of the puzzles. Later, when the puzzle is sold, the cost of the puzzles will be transferred to cost of goods sold, an expense account. So eventually, the $35,000 of depreciation does become an expense when the puzzles are sold. Now I'll post the $35,000 to manufacturing overhead. For the credit, we credit accumulated depreciation, a contra asset account that is increasing. In part 2 of transaction 4, Peggy's Puzzles paid $20,000 in cash for factory rent and factory utilities. Since they are part of the cost of the puzzles, they are product costs and therefore cannot be expensed as rent expense and factory utilities. They have to be either allocated to one of the two processes, which are assembly or cutting, or accumulated in manufacturing overhead. And since the rent and utilities cannot be directly linked to either department specifically, the cost will be a debit to manufacturing overhead. Now I'll post the $20,000 to manufacturing overhead. For the credit, we lower cash, which is an asset. Now transaction 5. Peggy's Puzzles used a predetermined overhead allocation rate to allocate indirect costs to its two production departments, the assembly department and the cutting department. When they use that predetermined allocation rate that we learned about in the job costing chapter, let's just assume that manufacturing overhead allocated to the work in process inventory of the assembly department was $48,000. And the manufacturing overhead allocated to the cutting department for the month was $11,000. So all those indirect costs that were accumulated in manufacturing overhead are now allocated to the departments based on the department's size. Remember, the size is usually measured by direct labor hours, direct labor costs, or machine hours. Since this is a machine-intensive production process, it's most likely based on each department's machine hours. Then we lower the manufacturing overhead account with a credit. Now I'll post the $59,000 to manufacturing overhead. Next is transaction 6. In this transaction, we're going to transfer puzzles from the assembly department because they are finished with that process, to the cutting department. At the end of July, when the production cost report for the assembly department was prepared, Peggy's Puzzles assigned $176,000 to the 40,000 units transferred from the assembly department to the cutting department. So when recording this transaction, the inventory account that is increasing with a debit is the cutting department, an asset account that is increasing. And since these puzzles left the assembly department, we have to decrease that work in process inventory account with a credit. Since we are recording a journal entry, remember debits and credits are only for dollar amount. So do not try to insert the 40,000 quantity into a debit or credit column. That's just extra information. Next is transaction 7. In this transaction, we're going to transfer puzzles from the cutting department, because they are completed, to the finished goods inventory account, also known as the warehouse. At the end of July, when the production cost report for the cutting department was prepared, Peggy's Puzzles assigned $201,400 to the 38,000 units transferred from the cutting department to finished goods inventory. This is the cost of goods manufactured. So when recording this transaction, the inventory account that is increasing with a debit is the finished goods inventory account, an asset account that is increasing. And since these puzzles left the cutting department, we have to decrease that work in process inventory account with a credit. Next is transaction 8. We finally get to sell puzzles. During July, Peggy's Puzzles sold 35,000 puzzles on account for $8 each. Refer to the cutting department's production cost report to determine the cost of each puzzle. Notice the transaction description tells us how much we are selling the box for, $8 each, but it does not tell us how much it costs to make each puzzle. We need to know the cost so we can update cost of goods sold and inventory in the second part of this transaction. So, to determine how much it costs Peggy to make each puzzle, we have to look at the production cost report, which we'll look at on the next slide. To determine how much it costs Peggy to make each puzzle, we have to look at the production cost report of the last department, the cutting department. This is the report that we created earlier. So remember, the cutting department's production cost report also includes the costs transferred in from the previous department, so we do not need to consult the assembly department's production cost report. We only need to consult the production cost report from the last process where the units are completely finished. So where in this report would we find the final total cost per puzzle? We would find it here. So it looks like it cost Peggy $5.30 to make each puzzle. Of the $5.30, $4.40 came from the previous department, and then the other 90 cents came from this department. But all we need is a final $5.30. So no wonder she's charging $8 per puzzle. Now we can go back to the previous slide and use the $5.30 cost per puzzle to calculate Peggy's total cost of goods sold. So here is our transaction description with all the details. Peggy's Puzzles sold 35,000 puzzles. We have already determined from the production cost report from the cutting department that the cost of goods manufactured is $5.30 per puzzle. Therefore, the cost of 35,000 puzzles is $185,500. We got that by multiplying 35,000 puzzles by $5.30. The puzzles were sold on account for $8 each, which is a total of $280,000. We get that by multiplying $8 by 35,000 puzzles. As always, whenever we sell a product, we need to record 2 journal entries. Since these were sold on account, we have to increase accounts receivable and asset with a debit of $280,000. Then we need to increase sales revenue with a credit for the same amount. Then we have to increase COGS and lower inventory. Since COGS is an expense, it increases with a debit of $185,500. Then we need to lower inventory. But which of these inventory accounts do the puzzles come from? They come from the finished goods inventory account, an asset account that is decreasing by $185,500. The last transaction is number 9, adjusting manufacturing overhead. Remember, the manufacturing overhead account is a temporary equity account that is treated like an expense. It accumulates overhead expenses until they can be allocated to the different departments' work in process inventory accounts. Then at the end of the period, we have to close the account with cost of goods sold being the other account. So now we need to total the manufacturing overhead account. We add the debits and subtract the credits, and we find out we have a credit balance of $500. Now, the textbook might not use T accounts to show this information. Instead, they may give you this verbiage. The actual manufacturing overhead costs incurred were $58,500, which includes the indirect materials in transaction 2, the indirect labor in transaction 3, and the accumulated depreciation and other indirect costs in transaction 4. The amount of manufacturing overhead allocated to the two departments was $59,000, as shown in transaction 5. This is the long way of saying that the manufacturing overhead account has a $500 credit balance. Because it has a credit balance, this means we over-allocated our costs. In other words, we over-costed our puzzles. So how do we close this account, which means it needs to have a zero balance? Remember, it currently has a $500 credit balance. Well, to close it, we need to debit the account $500. So in the journal entry, we debit manufacturing overhead $500 to close it, and then we credit cost of goods sold $500. This means we are lowering COGS by the over-allocated amount. Now we have ensured that we have allocated the exact amount of manufacturing overhead, either to the work-in-process inventory accounts in the earlier transactions, or cost of goods sold as shown in this transaction. Remember, the overhead allocated to the work-in-process inventory accounts will eventually flow to finished goods, and then to cost of goods sold once the units are sold. So eventually, all manufacturing overhead, as well as direct materials and direct labor, eventually flow to cost of goods sold when the products are sold, and this end of period adjustment is completed. So after all those journal entries are posted, this is what the financial statements would look like. On the balance sheet, work in process inventory for the assembly department was $32,000. Work in process inventory for the cutting department was $31,640. And finished goods inventory has a balance of $15,900. Meanwhile, over on the income statement, cost of goods sold was $185,000. Of course, we're not showing the revenues on the income statement, but we could have gotten that from the transaction where we made the sale of the puzzles.